We're recording this video Sunday 15th of April 2012 here in Sydney, Australia. It's coming up to 9:30 p.m. Chicago time on Saturday night. Hope you're enjoying your weekend. It's been an interesting 24 hours here. Had to endure a spam attack and one of my accounts being hacked all in the space of 24 hours. Makes me think like I'm on somebody's list. Anyway, the website Emini-Watch was down for a while, and plus all my emails would have kind of been bouncing during those times. So if you kind of got a bounced email, that's why. I'm not inviting you to re-email me. I think everybody knows my view on email. But just to let you know that that's kind of what's going on. Interesting, running a website. This is just something, nature of the game. So just have to endure it and kind of soldier on. A couple of things I want to talk about in my charts. First one is where are we and what are we going to do next? And the second thing is commitment of traders. I haven't talked about commitment of traders. I want to talk about decoupling and commitment of traders numbers. So let's get into it. Charts. So Friday, interesting day. I thought we'd run a little bit and we needed that downward swing on the 45-minute chart. And we ended up with that weakness coming out with yesterday's trade. About 1.5 million contracts traded, closed down at 65. Although that last kind of half hour of the day was really pretty swift down move. If I go to the 135-minute chart, though, this is what's kind of got me interested. Although that weakness, in the last part of the day was pretty strong, the volume that traded down was not all that great, and I'm just wondering if the professionals were trying to pick that up. We'll see on the 4500 tip bar chart that there's a lot of professional activity there. This is absolutely key, kind of this, between where we are now and 1350. We need to put in a bottom at this stage in order for us to continue this rally, or see the end of trend move kind of go off. This is what I've been kind of referring to. So looking at 3 time frames, factor of 3 different between the two, come down from the daily chart to 135-minute chart and then down a factor of 3 again to the 45-minute chart. And trend moves that you see lining up on the 45-minute charts are cycle moves here on the daily chart. So we've been finding these end of trend sequences really helpful. Pull back to end of trend on the 45-minute chart was the end of this kind of up move here, which kind of helped identify that cyclical or that turning point here. We came down to that pullback level and we're making a pullback to dirty end of trend here, but the activity, we didn't quite get there, and we went broke above that resistance level. And that's why I said, because we've not seen any bullish divergence and we still had that kind of cyclical weakness, that's why we were going to get a down move of some dimension on Friday. It was surprisingly to me, how swift it was at the end of the day. But anyway, there was a downward momentum because of that cycle. Now that cycle's has come to an end now. We kind of got support on that 45-minute chart, and we're coming up to some kind of bullish divergence pattern being put in here. But we got to hold. We closed this gap pretty much here. We're kind of back down, testing around the 50s. So Monday's activity is going to be absolutely key. The news out of Europe is not good, Spain and so on. I think emotionally a lot of traders are starting to think this when you look at Apple closed almost down at 600. It was a big sell-off in Apple on Friday, and a lot of people may be taking profits. So just this needs to hold, and for this pullback to end of trend sequence to play out on the daily chart. So that's what I'm going to be looking for Monday into Tuesday's activity, that 50 level holding. If that holds, this is good. We'll make pullback to end of trend, and we'll have a few days kind of strong rally, and we'll be testing those highs. But if the confidence has gone out of the market, that pullback level comes key at 30.50, and we kind of fall through there. We're away into a downtrend on the downside. The thing that's kind of got me a little bit, thinking, well, maybe we are going to head down, is on the 135-minute chart here. Pull back to end of trend. We had exhaustion buying. This whole pattern here looks nice in terms of topping out on the 135-minute chart, and we sold off. We came back up, and support becomes resistance. We bounced right off that. Basically it's closing the gap. We bounced off there, and that was the weakness we saw. So are we in a downtrend on the 135-minute chart that's not going to be held by that support level on the daily chart? So I suppose I can't be any more helpful than that in terms of saying it could go either way, but 1350, the kind of the lows down here need to hold for it this rally to kind of keep on going. And you can see it in the long-term charts if I look at the 4,500 tip bar chart. So this was this huge exhaustion move that we had. It was like a blow-off top into the 1420s. We tested again after we'd seen first bearish divergence, flush patterns, flushing out the last of those buyers. We kind of sell off here. And what's interesting on the downside, we've not had exhaustion patterns kind of signal. This was a large amount of selling that got this move going, and then that kind of was a significant level kind of down here, and this was also a significant selling level down here. Those are big readings, but they're kind of playing off this real extreme overshoot that we had here. They're similar to that reading that we had, and this one was a real extreme reading at over 100,000 on the 40,500 tip bar chart. So maybe it's enough to catch it, maybe not. If we go down to the 13,500 tip bar chart, it is pretty severe there. We've had an exhaustion selling signal, and we need to put in kind of bullish divergence after that, but it might be enough to hold. And when I looked at the 4,500 tip bar chart, this is all the blue professional bars that came at those lows. The end of trend, it was the end of trend early, and it should have kind of printed here, or was that a support level that we fell through the ice, and those are the professionals actually just selling the hell out of this move, in anticipation of continuation on Monday. So I don't know. We'll see Sunday night. If this just kind of continues and Europe sells off. I mean, we had Italy and Spain really weak on Thursday and Friday. Big moves in those equity markets, and if the confidence is gone, and the curtain's been pulled back, and Europe is heading towards not just a recession but a depression, blah 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 blah. Everybody knows the story. In terms of my trading on Friday, I don't know. I had this downside bias, and then I messed it up when we're trading. Got short 77.50. Kind of right off the get-go, we closed these blue professional bars on the 1500 tip bar chart kind of got broken, so I got short straight away, and I just got freaked out by this kind of retracement move back here. So I exited with a 1.25 point loss, and then as soon as we went the other way, I was on it again, getting short at 77.50 again, and then the bullish divergence pattern came in. The blue professional bars kind of came in. The first one kind of came in. We broke the high of that, and I was like, huh. And this was around a support level on the 4500 tip bar chart. It's like, maybe we're actually heading up. So I reversed and went long. Dumb. Anyway, took a 4-point loss on the way down here, but recovered a little bit. Kind of got short again at 74.50s. Picked up 4 points on this kind of down move here, and then waited until we had blue professional bars kind of coming on the 1500 tip bar chart, and I went long at 70.75 around here and took off another 3 points here. So I ended up net 1.5, but it should have been a sweet 4-point one-shot wild kill straight off the get-go. I just got freaked out. So anyway, my friend Jason managed to get that one-shot one kill. He sent me a great little email. I might put that up on the site because he deserves a mention for that. Anyway, so there we go. That's where we are. I think the lows around the 1350 levels are absolutely key. Let's see what happens on Sunday night. Let's see where Monday and Tuesday kind of go. If the bottom just falls out of the market and we kind of keep going the other way, that means the confidence is completely gone. But we potentially could be sitting on some bullish divergence patterns, and actually that'll hold on Sunday night, and we'll kind of reverse go the other way. Okay. Commitment of traders. Going to talk about two things on commitment of traders. First of all, where we are in terms of the equities markets. So now, commitment of traders. This is what I'm doing with my commitment. I used to follow this thing like a hawk every week, seeing what's going on. And commitment of traders now I find is an interesting kind of aspect of the market, but using it as signals, buying, sell signals, whatever. Very tricky. It's kind of weekly data, and the professionals flip from being kind of trend following to hedging. So you don't know kind of which way they're going. But this is what I'm doing at the moment. So I calculate the net of what the commercials are doing. So the longs versus the shorts over the total open interest, and I express that as a percentage of the total open interest, and then I flip it upside down. So I'm not looking at that this below the market here is not actually what the professional's net position is. It's the reverse. It's the inverse, and I just find that helps more than anything figuring out what's going on. So effectively, effectively that's the net hedging that's going on. So as the market goes up, the professionals are shorting, but that's what this is showing down below. One day I will release the better kind of commitment of trader indicators. There's 3 or 4 of them I find helpful. I will release those, but for the time being they're not released, so please don't email me for requests on that. But long term, let's see what we did. So coming into the bottom in '08, you can see the professionals flipped around their positions. They were under the line. I'm not going to say short because in fact they were net long here, but let's say they were negative here in terms of this indicator, kind of into this sell-off, and then as the market kind of sold off down to the 666 kind of level, they flipped and they went the other way and they kind of rallied from there. What I look at and I find very helpful is the divergence pattern. So when do you see the professionals kind of starting to change their behavior? And here we are, we're coming up to the 1400s kind of levels here, and the higher highs are coming off in terms of what the professionals are doing. We had a peak here in what they were doing, and then the highs have been lower highs as we've been making new equity highs. So you can see here and again into here and here, and so with this week's activity it's net plus 1%, and the last little spike up last week was incredibly weak. I think it was only about 3% kind of here. So you can see this divergence kind of coming off. So that for me is a really important kind of signal. It's showing a lack of, the professionals are starting to do something. They're not as committed to this uptrend anymore, and so this is starting to roll and go the other way, and we've got these divergence patterns kind of rolling on. So sometimes they can signal quite nicely. Sometimes this one we had kind of overshoot, a bit of euphoria, I think we'd say, in those last several weeks up into that 1420 kind of level. So that's in terms of equities what's going on. So that kind of supports an argument that we're going to have an equity kind of sell-off. The question is, in my mind, are we going to make on the daily chart, here on the daily chart, are we going to make this pullback to end of trend sequence in that topping out move, or are we just going to give up the ghost here and kind of go the other way? So then let's look at some commodities commitment of traders charts and some currency commitment of traders numbers. Now here what I'm plotting is monthly charts. And gold is a really interesting chart with commitment of traders here, because it fundamentally changed in 2001, where all of a sudden, again, this same kind of thing. I'm not going to say the commitment of traders kind of went net long, because in fact they're net short here, because I flipped this upside down, but the character entirely changed at the bottom. At 450, this thing changed entirely, and it just all of a sudden has never been below the zero line again. It's just held up high, and really that's an expression of confidence in the Fed printing money. This is gold is the inverse dollar index, and it shows that the professionals here believe that money printing will continue, and that's why they've got this position on in terms of gold, and it fundamentally flipped at this kind of time right at the bottom, 2001. Now, what I find interesting, and I mentioned this kind of once before on crude, look at the crude picture. Crude picture on a long-term time frame, since this bottom in crude, we had the huge sell-off in crude, the huge parabolic rally and the huge sell-off down to the kind of 70s level. And ever since then, we've been stubbornly, kind of positive on this reading of commitment of traders. And to me, that's just starting to look like what the gold picture was doing in 2001. And so is this an expression by the professionals that there is peak oil, and there will be a fundamental lack of supply of oil going forward, just as the gold chart says that there will be money printing while the Fed is in charge, and therefore gold will inexorably be supported because of that? And is this a fundamental flip in the crude chart? Now what's interesting is then you back it up against copper, and you see copper, the last huge rally that we had, part of the commodities rally 2000 and into the early 2000s, the professionals got incredibly strong here. Not going to say bullish, but anyway, so there's strong here, and the market kind of goes up, and then the market kind of tops out, and we have these divergence type patterns, and we kind of sell off. But interestingly, copper over the last couple of months has been really weak. So copper is acting more like a traditional commodity with supply and demand kind of going on. But crude is acting more like gold and is a reflection of there being peak oil, and that has to be factored in, that we're going to see, we're never going to see $50 oil, $70 oil kind of again. We'll always see 100 plus type dollar oil kind of going forward. Now, on a daily chart, crude's looking kind of weak. Well, if the equities market sell off, crude will sell off from whatever. But I'm talking long, big picture here in terms of the crude market. So, is there some kind of decoupling that's happening? Normally kind of look at all the risk on, the risk off charts, and they all move together. So commodities kind of move together. And could we be seeing a decoupling between crude and the rest of the commodities markets? Currencies, similar type pattern. So let's look at the dollar index. Now the dollar index, which I've been a big fan of over the last year basically, so I kind of flipped all my trading capital into US dollars from Aussie a year ago. I was way too early, but again, the same thing. We've been making these bottoms down here, monthly charts and so on, and commitment of traders is incredibly strong here, kind of supporting the US dollar. When you look at it in terms of the euro chart, they're incredibly weak. So, ever since, the weakness, we've seen kind of weakness, the fundamentals of the European market kind of have been laid bare. We've been incredibly weak in terms of the euro. So, that's an interesting one for me, that we're going to see actually strengthen in the US dollar, and I think it's counter everybody's hyperinflation and arguments that the Fed is destroying the dollar. It's a question of are the Europeans destroying their euro more? And so this would suggest the dollar index is kind of going to remain strong. What's interesting for me on the flip side is bonds. So this is the 30-year bond contract, and again, this is starting to show persistent negative values on commitment of traders, even as we're kind of making new highs. So when you used to be able to see kind of the bonds and the US dollar kind of moving together, are we going to see a decoupling between the treasury market and the dollar index market? Just throwing that out there just as some thoughts in terms of those numbers. So if you do follow commitment of traders, it might be interesting kind of looking at those longer term charts. Shorter term, this divergence pattern though shows that this latest high, 1420s, was made with less and less conviction by the professionals. So that's something to look out for. Anyway, there we go. A little bit of a longer video on a weekend. Hope your trading is going well, and looking forward to Monday's market.